Yeah, so Jake, how long have you been a financial planner?
About 10 years.
About 10 years. And in the scope of your work, what are you doing with clients, just to give us a picture?
Yeah, so generally I'm working with people that have enough money to warrant the need for someone like me to help them. So whether they like it or not, the more you accumulate, the more successful you are, the more complex your life gets, again, whether you like it or not.
Right.
And so that's where someone like me comes in to help them
And
navigate those.
the investing side,
So we manage
retirement
investments.
planning.
Totally. So helping them retire, helping them manage their investments for the purpose
Right.
of retirement.
Right.
Even looking at things like, can we save money on taxes?
So tax planning.
Tax planning. We're looking at their estate plan. We're looking at their insurance.
Yeah.
So it's a whole holistic, comprehensive overview.
And then you've also been an elder at the Well in the early days
Yep.
of that church. So
The bar was low.
But you also have a heart as like you were a part of Hill Country Bible, then
Yep.
went with the Well when they launched, and so you've got a unique position when it comes to pastoral finances and clergy in particular.
Totally. So even before, so I've seen it from both sides. I've seen it from the board side of things, but also worked with Rick Perales in Church Biz.
Right.
And so Church Biz does accounting for probably for most of y'all's churches. And so, yeah, I worked there 5 years, and so I got a good view of pastors have very unique tax, housing allowance, like all of that kind of stuff. Like you guys have a unique setup.
Yeah.
And so, I learned a lot of that with Rick.
Right. And then now you serve on the board of the association.
Yep.
So
So
thank
now I'm
you.
on the board of the association.
Yeah. So thank
Totally.
you for that. Okay. So Jake, help us.
All right. So I got to say, this is my first time with the Garth Brooks mic, so I was expecting a stadium, but I'll do this for my adoring fans on the video, right? All right. Personal finance for pastors. So here's the thing. You guys wear a lot of hats, so these were just the first ones that came to mind. So you're a counselor. People share their deepest, darkest secrets with you, right? So you carry that weight. You got to provide leadership to either your ministry area or the church as a whole. So that carries a burden, right? You've got to be the communicator. So you're prepping sermons, you're casting vision. You're expected to be the Bible expert, the theologian. You've also got your family that you're trying to make sure that your family is healthy. And then all the way down at the bottom, usually what gets neglected are the personal finances of pastors. On top of that, so it's already you're wearing a lot of hats, carrying a lot of responsibilities. Your finances are more complicated than the average person, as you guys know probably better than I do. So just off the top of my head, you've got the housing allowance. The housing allowance is subject to self-employment tax if you have not opted out of Social Security, but it's not subject to income tax. You've got Social Security. You're one of the few people in the world that can decide whether you opt out of Social Security or whether you don't opt out of Social Security, and that comes with its own complexities. SECA, so if you don't opt out of Social Security, then you're considered self-employed for self-employment purposes, but from an income tax standpoint, you're a regular employee. So and those have all their own spider webs of decisions that need to be made, right? So you're wearing all these hats. You got all this responsibility. You got a more complicated situation than most people have. So if I go into your church one day and I see you do this, I'm not going to judge. I'm just going to know, I'll pray for you. So this is our friend Rod Parsley, right? So I Googled pastors screaming and had a lot of charismatic pastors. Jesse Duplantis was an option, but this one was the most fitting one. I did not edit that sound. That's actually him screaming. And so no judgment if I see you do that, right? It's overwhelming. So the goal here today is this. So let's provide clarity. So equip you with the knowledge. So again, you've got unique situations. How do we navigate those? What are some decisions that we can make? How do those decisions impact things like retirement? Is retirement even biblical? Let's build clarity and put you on solid financial ground so that I don't see you break down in the middle of a sermon. All right, so this is what we're going to do. We're going to start with foundations. So we're going to work through these different sections. I'll stop halfway through, ask questions. The whole point of this, I mean, again, there's 7 of us here, right? 8 counting Eric, 9 if we're counting Lori. So we can make this as discussion-oriented. I've found the most productive use of these types of presentations is for you guys to be interactive. So feel free to stop me, but just know I'm also going to stop as part of the rhythm and just give y'all time to think about things, ask questions. That's what I'm here for. So we'll start with foundations. We'll talk about investments, retirement, tax, Social Security, and then last, insurance and estate. Sound good? All right. So foundations. So this is the most important question that you can answer. Every financial decision, every financial decision comes back to this, which is how much do you need? If you can't answer that question, you can't answer any other financial question that there is. How much do I need to retire? Well, you don't know that unless you know you're spending, right? Things like if you want your wife to stay at home, you can't answer that without knowing how much is our spending, how much is going to go away if my wife stays at home. Can I buy this house? You don't know that without knowing exactly what your spending is. So every single financial decision comes back to this. So this isn't probably news to you guys, but I've found most people don't have a budget. So there's no getting around that you need a budget. You need to know what's coming in and what's going out. Every other financial decision, financial question can only be answered whenever you know the answer to that one. So the first thing you do once you get your budget is you fund your emergency fund. So step 1, fund your emergency fund. So emergency fund is there for what it sounds like, for emergencies. So the typical recommendation is 3 to 6 months of living expenses. Again, getting back to the previous slide, if you don't know what your living expenses are, you don't even know what you're supposed to have in your emergency fund. So in an emergency fund, it locks and unlocks flexibility for you. And so I would even say 3 to 6 months is the guideline. You can even go up to 12 months if you're a church planter and your wife is staying at home and you're about to launch your church. 12 months is probably a good emergency fund to have, right? And so 3 to 6 months is a guideline, but that cash is there to turn what would otherwise be a catastrophe, things like you lose your job, you need a new car, your AC breaks, medical emergency. Those things, if you don't have an emergency fund, can turn into catastrophe pretty quick. An emergency fund makes them an annoyance. So it turns them from catastrophe to annoyance. So low-hanging fruit for today from a financial standpoint, so once you fund your emergency fund, keep it in what's called a high-yield savings account. I'm not sure if y'all are familiar with high-yield savings accounts, but so what a high-yield savings account is you've got your checking account, you've got your savings. This is low-hanging fruit because there's no fees, there's no catch, there's no, teaser rates, anything like that. It's simply a savings account that you get a higher interest rate on it than you get in your checking account. It's usually about 20 times the interest rate that you would get from your checking account. And so they're FDIC insured, so that means up to $500,000. So long as you have less than $500,000 in the account, the bank goes under, you still get your $500,000 back. So I know my room, I know my audience here, pretty sure we don't have, I think we're good on the $500,000 limit. But right now they're getting about 3 to 4% in interest, right? And so again, it's low-hanging fruit. They're all online. You connect it to your checking account if you do need that money. But here's a list of accounts. I pulled this earlier last week. And so these are the highest yielding accounts right now. I think we're sharing the slides with everybody. So CIT Platinum Savings is paying the highest right now. I think it's actually 4% as of yesterday. But it's 4%, and there's no strings attached to that. You don't have to have a certain balance, anything like that.
What about timeline, like a CD? Is there any, like, you have to have it within 6 months?
So yeah, CD works when you have a known time frame and a known obligation. So perfect example would be, I need to pay a $5,000 tax bill on 4/15, when taxes are due. And so you could buy a, whatever that would be, 9-month CD that then matures. That means you get your money back. So you put $5,000 into it, you get your money back, the $5,000 at the end of that time frame, plus interest, right? So whatever the interest rate would be. And so that's where CDs work best.
But high-yield savings accounts do not have.
They do not have that. High-yield savings accounts, or you pull it out whenever you want. Yep. Add to it whenever you want to. Put as much in as long as it's. I mean, you can put more than 500,000 in it, but you're just not insured at the amount. So for all practical purposes, you put as much in as you need. All right. The next question, should we pay off debt? So I'm going to make Dave Ramsey proud here and say yes. I agree with Dave Ramsey, not that he needs my affirmation, but paying off debt, especially as you're in ministry, you're church planting, all debt is a claim to your future income. And the more claims to your future income you have, the less flexible and the less options you have. So practically what that means is if you're wanting to plant a church and your income is likely going to go down from where you were prior, the more debt you have, the harder that is to make that happen, right? And so everything, credit cards, student loans, once you fund your emergency fund, work on paying off debt, everything except your mortgage. So it gives you the flexibility. Any questions on that? Any thoughts on that?
Is there a time, when do you think you should pay off your mortgage?
Oh man, I've seen people recently that have 8% mortgages, because interest rates have gone up, and so that's a consideration. But yeah, that's kind of a nuance, yeah. So there's an emotional component and an economic component of it. So the economic component, which is, if you're a Dave Ramsey hater, people that get annoyed at Dave Ramsey get annoyed because he says to pay off debt regardless of the interest rate. And the economic folks would say, well, if you can borrow at 2% and then get 8% on your investments, then you're making 6%. And so that's what drives them crazy. But there's an economic, but then there's an emotional component to it. And so Dave Ramsey leans towards the emotional component of it, the behavioral component of it. And so I would say if just being completely debt-free gives you peace of mind, you sleep better at night, that sort of thing, you can't put it on a spreadsheet, do it. It's not a bad decision to pay off your mortgage and be debt-free, right? So we build an emergency fund, pay off our debt to give us flexibility. So now let's talk investing. Now we're ready to invest. So how much should I save for retirement? So I'll get into the retirement question here in just a minute. I won't say a lot, but is retirement biblical? I'm not going to get into the theological. I'm happy to if we want to debate that. But I'm just going to assume, and I'll show y'all here in a minute why, that we're going to retire. So the general guideline is this. If you haven't opted out of Social Security, then contribute 10 to 15% of your income towards retirement. So if you haven't opted out, 10 to 15% of your income is a good guideline. If you have opted out of Social Security, then you need to just about double that. So 20 to 25% of your income. So the reason for that is Social Security makes up about 40% of your retirement income generally. And so once that goes away, you basically need to double your retirement contributions to make up for that. Does that make sense? So I'm going to drill into the Social Security question here later, but just general guideline. If you contribute 10 to 15% of your income to retirement, if you haven't opted out, or 20 to 25%, you're going to be in good shape. So you want to have compound interest working for you. So Einstein calls compound interest the eighth wonder of the world. So when you're contributing that 10 to 15%, where you're putting it in an investment, you're not putting it in cash because you want compound interest to work for you. So here's an example of how compound interest can work. So I'm just assuming a starting income of $80,000. You have a 2.5% annual salary increase every year. So you're getting salary bumps basically tied to inflation. You get a return on your investments of 77% on average every year. So that's a relatively conservative number. And we're investing over 30 years. So I've got three charts here. So here's a 10% rate, a 15% rate, and a 20% of your income rate. So as your income goes up, you're starting at $80,000, you're contributing 10% every year, you get salary bumps, you're still keeping it at 10%. Look at what this does. At the end of 30 years, at just 10%, you'd have $1 million in your investment account. And what this shows here is the light orange is your contribution, and the dark orange is the compound interest component, or what the market has done. And so out of that million, 351,000 is what you contributed, and over or almost 700,000 is what compound interest has done for you. And it gets even better. At 15%, you'd have 1.5 million. You've contributed 500,000. You've got $1 million in growth, 700,000 and 1.4 million almost, and a $2 million ending balance. So all that to say, you want compound interest working for you. It's your friend. In the beginning, it's going to be mostly contributions, but then you're going to look up 15, 20 years from now, and you're going to be amazed at your account balance. That's the goal here, right? Is to 30 years from now, I see you, and you tell me your account balance, and you're like, man, that was the best 30 minutes or an hour of my week that week. So to get that 7%, again, we mentioned we're not investing in cash. So you've got to invest in something that has a growth component. So what do you invest in? So first of all, legally, I'm not allowed to give y'all investment advice and say this is what you should invest in. But I can give you some guidelines. So if you don't have any strong investment opinions, number one, your 403b, 401k are the first places to go. You just take it right out of your paycheck, and it goes right into your account. It gets invested automatically. And then what do you invest in when you're there? A target date fund. Again, if you don't have strong investment opinions, a target date fund is a great, great option. It's a set it and forget it type of option. It starts out more aggressive, gets more conservative as you get closer to retirement. That's what the target date is referencing, is your retirement. So you'd go in and pick your, general retirement date or year, and it creates an investment or creates a pool of investments for you that are, number one, it's simple, they're diversified, so there's going to be U.S. stocks, international stocks, bonds. It's going to have everything you need in one investment. And if you invest in an index fund, then it's going to be low cost. And so just as a general guideline, costs, which are called the expense ratio of the funds, they directly reduce your performance by that number. So if, say, you would have gotten 7% and the expense ratio on the fund is 1%, then you personally get 6. The investment's got 7, the manager gets 1%, you get to keep the 6%, right? And so from a cost standpoint, you want to minimize those costs to the extent that you can, and that's where index funds come in. Does that make sense? So this is why I say index funds. So this is a chart. This is done by the S&P, so the S&P 500. So they're an index. And they run this report, they run this survey every year. And what it is it compares professionally managed active funds to a passively managed benchmark, which is an index fund. And so what it's doing is it's comparing, there are professional managers who are paid a whole lot of money to try and beat what's called a benchmark, or another way of saying it's an index. So the S&P 500 you've all probably heard of. So that's what the managers are trying to do. So the question then is, well, how good are they at beating that index? So here, all domestic funds, so these are U.S. funds, so on a one-year basis, almost 80% underperform their benchmark. So 8 out of 10 on a one-year basis underperform. But there are asset classes, like if you look at small cap, so these are small companies, almost 30% or almost 70% outperformed, 30% underperformed. So the vast majority of active managers outperform the index for small companies on a one-year basis. We tracking? But look how bad it gets on a 20-year basis. On a 20-year basis, for all U.S. funds, 94% underperform the index. So 94% of people that are paid a whole lot of money, Wall Street that you hear about, they're paid a whole lot of money to try and beat this index, and 94% of them don't. So 2 big takeaways. Number one, I know my audience here, if you as a pastor think that you're going to be able to outperform the market by picking individual stocks, by getting in and out of the market, you might get lucky and do it for a year, maybe 2, maybe even 3. But over the long term, you're not going to outperform the market. So that's takeaway number 1. Takeaway number 2 is, okay, well then what should I invest in? Again, I can't make a direct recommendation for y'all, but just from a philosophy of investing standpoint, that's where index funds fit in, is if you're looking for, look, I don't want to try to beat the market, I just want to track the market and manage my costs. That's where index funds come in. Or Bitcoin, right? Or Bitcoin. Yeah, exactly.
I was getting nervous there. I've gone hard on Dogecoin. I got a tip for you.
I actually had a client that bought, I don't know, it was $1,000 worth of Doge when it first came out, and it got up to like 150,000, but he didn't sell it, and now it's down to like 30,000 or something like that. But it keeps going up and down, but yeah. But all that to say, so from a Bitcoin standpoint, now that you mentioned it, it's red meat. I've got to address this. Because it is everybody's interested in it. It's gone up 10x. So the last time I did this, a talk similar to this, 2 years ago at Parkway Church, I think Bitcoin was at 14,000, and now it's at 104,000. So it's 10x'd in the 2 years. So, I've got some egg on my face because I was poo-pooing it 2 years ago, right? But this is why back to Dave Ramsey says this, and I agree with it. You need to understand what you're invested in. And so when you're invested in an index fund, you're investing in the global or the U.S. economy. That's pretty straightforward, right? Companies in the U.S. do well, I do well. Bitcoin is purely speculative, meaning it's either a store of value. So a currency is a store of value, meaning you put $1 in your bank account. A week later, you want to make sure that you can buy the same amount of stuff with that dollar as you did last week, right? Inflation can eat away at that a little bit, right? But that's what a currency is meant for, is to store value. So Bitcoin has gone up 10x in the last 2 years, and prior to that, it went down 80%. So it's not a good store of value. If you're looking for it to be stable and to store your value that you're trying to store well, it doesn't do a good job of that. And so then you say, okay, is it a good investment? And investments throw off cash flow, right? You put $1 in, and say a rental house is a great example. You invest in a rental house, it creates income, right? And then also the house itself can go up or down in value. And so that's how you evaluate whether that's a good investment or not, is should I put $100,000 into this if I'm only going to get $10 back? Probably not. Well, Bitcoin doesn't have any cash flows. There's no cash, so there's no way to know, like, what's the appropriate value of Bitcoin. There's no way to really know that because there's no cash that gets generated from Bitcoin like a business would generate, or again, this is completely aside here, but you hear all the time, stocks are overvalued, stocks are undervalued. Well, the only way you know that is if there are profits of the company, if there's cash associated with the investment. If there's no cash, then it's purely speculative, and it's gambling, basically. So that's my Bitcoin. If you understand that, and you understand it's purely speculative, and it's like gambling, then take a little bit of your portfolio and put it in Bitcoin. If there's just this huge FOMO component that you have, like take 10% or 5%, of your net worth or whatever, and put it in Bitcoin, or 1%. But this gets back to the original point. If you don't know your net worth, if you don't know what your income expenses are, then you can't answer the Bitcoin question. I would say stay away from Bitcoin if you don't know what your net worth is, because it's a pretty speculative, like high octane kind of investment. Does that make sense? Any questions on Bitcoin? That usually Bitcoin folks are pretty opinionated on that. So I don't know if I've offended anybody in here. So retirement. Yeah, that's a good question. So a Roth is a type of investment account. So if your 403b has the option to contribute to a Roth, then all that means is you get taxed on it when you put it in. So the money that you put in is counted as income to you. It grows tax-free, and then you never pay tax on it again. And so pastors are generally in a lower tax bracket, and so it generally makes sense to contribute to a Roth. But there's a curveball, and I'll get into it here in a second. But there's a unique kind of planning opportunity that pastors have that may make that a different decision, or maybe you split it between what's called pre-tax and Roth. And I'll get into that here in a second. But generally, Roths are great. You pay tax today, you never pay tax on it again. Does that answer your question?
Jake, are you talking about, by the way, you're going to address 403Bs?
Yeah, so there's so the housing allowance in retirement is what I'm alluding to, and I'll get into that in a minute.
Yes, sir.
So retirement. So this is something I hear from pastors a good bit when I've met with them from a retirement standpoint, especially younger pastors, is they'll say, I'm not going to retire. Like I'm going to work until I die, basically. And so that's great, except here's the actual data on retirement. So this chart on the left shows current workers' expectations to work past 65. So 70% of people that they polled expected to work past the age of 65. We tracking with that? Only 28% of people make it to the age of 65 from a retirement standpoint. So the actual median retirement age is 62. So if you say, okay, but that's people, they're being lazy, they just want to stop working, like kind of the traditional American retirement. Here's the reasons that people retire. 30% retire because of health or disability. So that's out of their control. Another 30%, there's a company downsizing. So that's out of their control. And so a lot of the reasons that people retire before the age of 65, or at least by the age of 65, are out of their control. So that's why I get back to, that's great if you plan on working for your entire life. Let's plan on you not. I think it's biblical to plan on, there's going to be a time where you either can't generate income or you're not able to generate as much income as you once did, right? And so that's why I think retirement is still prudent, and we could even argue biblical, just because purely most people can't make it to age 65, and it's out of their control. It's not because they got lazy, right? Any thoughts on that? Any questions on that?
I mean, like retiring in terms of generating income by going to work every day is different than not working, right? So like serving, I just wonder like,
Totally.
maybe even framing, helping people to see like setting yourself up for more financial freedom later
Totally.
in life, whatever season you might be entering into then.
Totally. That's what we call it at our company is financial freedom. We don't really use the word retirement because especially as Christians, most of the Christians that I work with, they don't want to just stop and, ride off into the sunset. They want to get more involved at the church. Or, I think of Paul Carlson. He's been, quote, retired for a decade plus. He's on the board of the association. He's helped plant the wells, on the board of the wells. So to your point, it doesn't mean you stop doing anything and stop being productive.
Well, I was curious if the stat even reflects that. Like at 62, if some of those people, they take part-time jobs.
Totally.
They do it. I would figure that doesn't really indicate that. It's just when they retire from kind of.
Totally. So 39% said, look, I could just afford to. And so I stopped working. 19% I wanted to do something else. And so to your point, not everybody just can't work, at age 65. There is a good percentage of people that financially they have the freedom and the flexibility to either completely retire or work at a, reduced income.
I guess my question, Jake, is like retirement to me, like you're saying, feels prudent and wise to plan for future needs. I guess my question biblically would be the person who's like, not investing in kingdom causes, eternal causes, because they're like, I need to maximize my retirement investments. So there's a little bit of like gray area in there. It's like you're, which I agree with what you're saying. Like this is on my mind because we're going to a building campaign, right?
Totally.
So I'm challenging people to give above and beyond for a 3-year period.
Yeah.
And you run into these conversations of like, well, I would love to give to that pastor, but I've got to give my X percent to my retirement and X percent to this and my kids' college, and and so you're kind of running into like what American values are versus like biblical. In other words,
Totally.
you can make the case prudent, wisdom-wise, like, hey, there's a time where you're going to need income that you're not going to be able to generate anymore.
Yep.
But, I mean, I guess biblically, it's a little hard to sit down with your Bible and make the case of, like, you ought to have this much in your account by 65, you ought to have this much in your kid's college fund by this time, which is more American norms than, like, what I see in the pages of the New Testament.
Yeah. Yeah, I mean, there's lots of stories. The guy that built a bunch of storehouses, I mean, that's the traditional non-Christian, which certainly can trickle in to Christian retirement, vision is I've built up all these things. Why don't I kick back, take it easy, and eat, drink, and be merry? And so, I mean, I agree. That's not biblical at all. I mean, there's a specific story that says, like, that's not biblical. I mean, the only thing I could say is it's dependent on the person, and is there a lack of faith that's why they're, contributing maybe more to their retirement than they should? Because I've seen it work both ways, where, I think it's just person dependent, it's heart dependent, and
Yeah, I guess even the statement, like, what they should. Like, when you say, hey, you should do 10 to 15% if you're opted out, or
Totally.
25 if you're opted, or no, I got it backwards, opted in or opted out.
Totally.
Like, where are those numbers coming from, right? Like, where is the should, you need this much?
So to replace, again, the general guideline is to replace your current expenses, you need to contribute 10 to 15% of your income to then be able to replace roughly 70% of your income in retirement. Because in retirement, you're presumably not going to have a mortgage. Your kids are on their own now, so your expenses go down, so you don't need to replace 100% of your income. So that's just a general guideline that if you want to maintain the lifestyle that you're used to living in retirement than contribute 10 to 15%.
Yeah, and I'm not disagreeing with that.
Yeah.
I'm just saying pastorally, the question you're asking, like, where do we run into this biblically, theologically? It gets
Totally.
to that question of like, okay, I as a pastor, I probably have, like, even though I have put money into retirement, I probably underfunded my retirement based on what you're saying, right?
Yep.
But I also feel this weight to get in front of my congregation and say, hey, if I'm asking you to give sacrificially to this building campaign, then I want to lead by example. So am I going to double my tithe for the next 3 years? Barry and I are going to do this to be able to lead by example on this capital campaign?
Yeah.
Yes. Would it be smarter should standards, American standards, to put that into retirement?
Yeah.
Probably. So that's what you run into, like, practically in my own life. But
Totally.
even the people we're shepherding, they're all wrestling with these kind of questions of like, how much do I put into retirement, long-term planning and investing versus like kingdom causes and
Yeah.
eternal perspective type stuff.
Yeah. I run into, you can't assign a percentage. Like, that's just for this talk, right? If I'm meeting with each one of you individually, like, there's probably going to be a different, like, the only way to uncover, like, is this a lack of faith? Is this a lack of prudence? And, I mean, the Bible's full of that, right? Like, there's Proverbs, which are more prudent focused, and then there's Abraham leaving to, Ur to, like, was that prudent? I mean, there's that tension all throughout the Bible. And so I don't know how you answer that without just meeting with them personally and understanding, like, is this a fear-based? Like, you're too fearful about not having money in retirement, or when you can't work, or are you too worried that God's going to be mad at you if I don't fund the capital campaign? And so I feel like it's a heart issue that you could only, like, one-on-one. Does that make sense? Any other thoughts on that? I mean, it's a hard question.
I've known some people who actually set hard goals for their kingdom investing.
Yeah. Totally.
Meaning, like, I have a goal to give X in my lifetime, and then, so what it does then is it puts the other in perspective.
Yep.
Somewhere in there, they're going to trust the Lord to provide for them as well.
Yeah.
Again, it's case by case because I've talked to a couple of people who've done that and they're different levels of net worth and all that. But I do think it's an important part of the conversation to bring in because we're never completely divorced from that, either as leaders and how we give and what we're asking people to do too.
Totally.
Yeah, but I agree with you. It is kind of a one-off.
Yeah, it's a tension. I mean, it's in the Bible. It's a tension. Like, is this prudent or is this faith, right? And I don't know. I wrestle with it all the time. Like, is this me being prudent or is this lack of faith, or vice versa? And so I don't know how you, without knowing them, having a relationship with them, knowing their biases, their struggles, like that kind of stuff, to know whether Jake's being prudent or whether he's being greedy, All right, so I'm going to stop there. Any other questions, just investing related, retirement related, cash flow, paying off debt, high yield savings accounts? Happy to answer any questions on those topics.
Just overall, when you look at the average pastor, the average church worker, what do you tend to see? Like, where are they missing it?
They neglect it, yeah, because in my experience, most pastors are relational. Like, this is not, financial is not their wheelhouse, just from a natural, gifting standpoint. And so it gets neglected. But then you add the faith component, or I'll call it faith, like there's the guilt component of being a pastor, and money is, I'm not supposed to think about money, I'm not supposed to care about money. And so it just kind of creates some unhealthy, what I've seen, unhealthy just mindsets. And yeah, I've also seen from the faith component, I've seen pastors that neglected it and just randomly came into whatever, like inheritance or like I've seen that. And so it's hard to diagnose it and say like this is the exact like plan and formula. But for the most part, pastors neglect their finances. And then on top of that, I was telling you when I was prepping for this, they'll come to me sometimes, and it feels like Nicodemus coming to Jesus at night, like under the cloak of darkness. Like I'm supposed to have all this together, but I don't. But I need to talk with somebody about it. And so it's just all that unhealthy like stuff that as a pastor, it just I've typically seen them, behind on their like we won't call it retirement. It's when I can't work savings. Like they're behind on that. Make sense? What other questions?
Yeah, I mean, I think that's the thing that was in my mind when you were talking about that tension was like, who should pastors be talking to about that? Because I agree with you, it's kind of case by case, and so,
Yeah.
I love what you said about the self-consciousness of pastors, like, I need help, but
Yeah.
that's been my experience too. I talk to pastors like don't really have any kind of plan,
Yeah.
but then also, I don't know who really to talk to about it, or should I go pay somebody? Like I don't
Yeah.
have money here, now I'm gonna go pay somebody to tell me I don't have a plan, like all
Right.
that kind of feels weird.
Yeah, totally. Number one, I'm happy to talk with anybody, just personally, like no charge, anything like that, and look at your finances and help you like navigate these types of questions. But yeah, there's not a lot of places to. Financial peace is great. Like I know it gets poo-pooed sometimes, but financial peace is pretty good. Are there some spiritual nitpicks that I have? Yeah, but like if you do what Dave Ramsey says, you'll be in good shape. Like bottom line. So yeah, does that answer your question?
Yeah, yeah. I guess I'm thinking through that whole thing we were talking about not just like a financial plan, but even the spiritual decisions of like,
Yeah.
am I leading well my congregation through XYZ giving initiative? Am I leading my family well through how to give and all this like
It's
it's kind of it always feels a little weird to me like where do pastors go
yeah,
to
that's
get
a
input on that?
yeah, I'm biased because I work on the other side of it with the financial. So it's hard to, in my opinion, it would be hard to shepherd them through that without having the information that I have, which is I know your investments. I see your tax return. I see what you're giving. I see what you're contributing to retirement. And so, not that you have to have that but it helps to have those data points to be able to say, like, hey, you're not being prudent here. Like, you don't have any insurance. You haven't saved any money. Understanding why they haven't saved any money. But it's hard to have those conversations unless you have that data right there to create that conversation. I feel like it's hard. You've got one hand tied behind your back trying to have those conversations, right? Like to your sermon, like Eric was talking about, nobody's ever come to him and confessed being greedy, which I was like, yeah, that's so true. And so people aren't coming to y'all confessing greed. And so it's hard as a pastor to enter into money conversations. Yeah, it's a challenge. Like I don't have an easy answer to like how do y'all, engage in those conversations, and for them to give you permission to speak to their financial state.
I thought that leading question was great, and to help frame that as well is like, how much do you need?
Yeah,
Start from there as well. If they need to kind of refocus and like, how do I make a decision? That's a great place to start.
totally. There's a really good. It's called generous giving, and that's one of the frameworks that they work through. Is they help really rich Christians like figure out how to be generous, and like that's one of the things that they ask is to come up with a how much is enough number, and they don't come up with any guidelines. It's just have God, the Holy Spirit, you guys work together with your family and figure out what's the number that is it $250,000 and anything above that, like I don't really need that, right? And then you can start your, to Paul's point, a giving plan with, I'm making $1 million a year, I only need 250,000 of it. Like, and I can be really intentional with this 750,000, right? So yeah, but it does get back to, you still got to answer that question of how much do you need. Any other thoughts, questions? All right. So now let's talk tax. So this is where the uniqueness of pastors comes into play. Again, I don't envy you guys. It's annoying. Especially, so first of all, let's talk housing allowance. So high level, y'all know this, but just to recap, housing allowance is tax-free from an income tax standpoint. So it's not counted as income from an income tax standpoint. But if you have not opted out of Social Security, then you pay what's called self-employment tax, or SECA. So housing allowance is counted towards your income for SECA purposes. And so it doesn't get taxed for income tax, but it does get taxed for self-employment tax. And so technically, pastors are self-employed and are supposed to file quarterly payments as a self-employed person. Well, that's annoying because you've got to calculate your housing allowance, all your income, and you got to take 15.3% plus whatever you think your income taxes should be and send that in every quarter. So here's one hack that you guys can do if you have not opted out of Social Security and you're paying SECA. You can calculate this 15.3% of your total income, so include your housing allowance in your income. So housing allowance $20,000, your salary $60,000, so $80,000. So 15.3% of that, just calculate that number and put it on your W-4. So your W-4 is what tells your payroll folks how much to withhold from your checks every time you get paid. And so you can include that 15.3% as part of your income tax payment, because the government, at the end of the day, doesn't care how much of it is income tax and how much of it is self-employed. And so you can get around having to pay quarterly taxes. You can just capture it in your payroll deduction. Does that make sense? Any questions on that? Yeah, what you can do on your W-4 is you can indicate a hard dollar amount to withhold. And so you can just do this 15.3% and put that as the hard dollar amount to withhold. Income tax-wise, you guys don't pay a lot generally in income tax because you get, we'll just assume an $80,000 a year salary. If 25,000 of that, we'll just call it 20,000, that's housing allowance. Now 60,000 of your income is taxable. Well, then you have a standard deduction, which is, we'll just call it 30,000. It's a little bit less than that. So the standard deduction removes that from your income. So now you're only making $30,000 a year, basically for tax purposes, which is, if it's not the bottom bracket, it's close to the bottom bracket. So that's the poverty bracket, right? So if you're paying income taxes, like you're not paying a lot in income tax to start with. So when you indicate the 15.3%, you shouldn't have to withhold a ton for income taxes just because there's not a lot there from an income tax standpoint. Does that make sense? Questions on that?
From a church biz perspective, like we've got the SECA stuff in our budget, does that mean that church biz is withholding those and sending those in?
No, that's the church. Usually that's usually the church putting that into a 403B, like into a retirement plan, so, which is great. So you've opted out of Social Security. That means that 15.3% is not going towards Social Security, right? That means you're not going to get Social Security. So you need to make that up from somewhere. So what the church does is says, hey, we would normally, for someone that's employed, they pay half of this 15.3%. So what the churches are doing is they're saying, we'll take half of that 15.3 and put it in a retirement plan for you because you've opted out of Social Security. Does that make sense?
So I think we're just giving it to them as a paycheck with our church, then they just have to do something with it
Oh, got it. Okay. So yeah, hopefully, what I've seen, this is the classic example. What I've seen from a Social Security standpoint is usually a younger pastor that is cash crunched, and somebody well-meaning on the elder board or whatever is like, Social Security is not going to be around anyway, so you should opt out. And it usually comes back to bite them. And so yeah, all that to say, if that money's being given to them, it really needs to be going into a retirement savings somewhere, not being just spent. Spend it, blow it. I'm just kidding. I'm just kidding. I mean, it just depends on your budget, right? Like, it depends on your goal. Have you funded your emergency fund? If not, then take that money and redirect it to an emergency fund, or pay down debt, or invest it, or give it, or some combination of all of that. It's kind of the same conversation as anything else that is part of your compensation. All right. So I alluded to this earlier. So this is a nice aspect of, you guys have a lot of stuff on your plate. You've got a lot of complicated tax situations, but this is one place where you can use it to your benefit. So you can actually continue to receive your housing allowance in retirement. So meaning after you stop working at your church, you can continue to receive a housing allowance, and that'll be tax-free. So how does that work? Well, first of all, it's got to stay in the church's plan. So you can't do what's called a rollover, meaning you stop working with them, that money is in the church's 403B plan. Normally, you would take that from there and put it in your own IRA account, right? That's called a rollover. So if you do that, you forfeit the ability to distribute and claim any distributions as a housing allowance. And so practically what this means is, to your question on the Roth, Justin, you can contribute pre-tax as a pastor and that not be counted as income. So you don't pay tax on that, right? And then it can continue to grow tax-free. And then if you pull it out and claim it as housing allowance, it's also tax-free. And so you literally never pay tax on that money. And so it's a really unique component, a really unique thing that pastors can take advantage of. Obviously, there's a lot of what ifs, like, are you going to be a career in ministry for your career, right? Because it comes down to, should I contribute to Roth or should I contribute to my pre-tax? If you contribute to Roth, you never pay tax again, right? But if you contribute pre-tax and you don't claim it as housing allowance, then you'll have to pay tax on that eventually. We tracking? I know I'm getting into the weeds here, but
I have a specific question on that, but it can wait till.
yeah, no, go ahead.
Well, and so I'm older than most of these guys, so I have accumulated some complexity. So I've got a 403B for Hilltop.
Uh-huh.
Praise God, that I've had for like whatever, 7 years. But in my prior church, we had, I don't even remember if it was through them or just with the advisor I was working with, but a Roth and another
Yeah, traditional pre-tax.
traditional, yeah,
Yep.
tax retirement account.
Yep.
So would those be eligible to be used as housing also?
Yep.
Because I've got that designation, or they just?
As long as you earned the money when you're an ordained pastor, you can claim it as housing allowance. If you've worked at multiple churches or even ministries, you worked with Crew and now you work at a church or vice versa, as long as you were ordained and when you contributed to that, it was from earnings from your minister compensation, then yeah, you can claim it as housing allowance.
You have to document that on.
So practically, this works the same way as your housing allowance works now. It's still got to be approved by a board. And so practically, you're not going to want to, most likely, get approval from your old church, get approval from your current church. And so consolidating those into one, most likely at the church that you retire from, and then you would just continue the same process that you do when you're employed, is you get an approval every year, or however you guys do it now.
So you would roll it over into that.
Yes.
Okay.
Roll it into the 403B. Yep. Does that make sense? It's kind of a complicated, but this is really, there's only one other account that normal people have to be able to do this called an HSA, health savings account. But you're limited to about $8,000 a year with that account. You guys can contribute up to almost $30,000 or even more if your church contributes too. So it's really the only way to never be taxed on these dollars ever in your life. It's really the only way to do that. Nobody else, no secular person has that ability to do that. Any questions or other thoughts?
So, walk through what you just said again on the limit as far as the contribution.
Yeah. So your 403B, you're limited depending on your age. I think this year it's $23,500 is the max that an employee can contribute to a 403B. If you're over 50, it's like $30,500, and it changes every year. But that's the most that you can personally contribute to your retirement plan. Your church can contribute on top of that, and that limit is in the like $60,000, $70,000 a year range. And so, all that to say, an HSA is $7,000 to $8,000 a year. This could be upwards of $50,000 to $60,000 a year legally that you could contribute and get the same tax-free benefit. Those dollars would never get taxed.
This might be specific person to person, but I guess I had in my mind, like, use the 403B at the limit of whatever's matched by the church, and then beyond that, put retirement money into a Roth. But are you saying that might be the wrong way to do it? Like, you might want to max out the 403B because of this housing allowance thing?
Yeah, it's person by person. I'd say if the odds are really high that you retire from ministry, then you would want to factor this into your planning somehow. I don't know what the specific number is. If you just want to keep it simple, just do half and half. Because you don't want to contribute, if you contribute all of it pre-tax, you're not going to be able to pull all of that. Say you get to $1 million, right? All of that's not going to be housing allowance. There's only a portion of that that's going to be housing allowance. And so what you could do is you could split it. You could say, I'll do half to Roth and then half to pre-tax, so that when I retire, I've got $500,000 in Roth, $500,000 pre-tax, and I'll use all the pre-tax for housing allowance, use the Roth it'll be tax-free. Any other questions on that? We're getting into the weeds, but hopefully it's helpful. All right. Social Security. So this is the single most, in my experience, single most important decision or impactful decision that I've seen pastors make. Kind of like I mentioned earlier, usually it happens, how I've seen it happen is that it's at the beginning of ministry, you're not making a lot of money, and an extra 15% of your income sure would be nice to have. And then an elder or maybe someone on the board, says something along the lines of Social Security is not going to be there anyways, so you should opt out. So, number one, opting out is not a financial decision. It's a conscience decision. So I've actually seen this as kind of an aside here. So this 4361 is the form that you've got to fill out if you've opted out or if you want to opt out of Social Security. I've seen pastors that think that they're opted out but haven't filled out this form and aren't actually opted out. This is the only way you can opt out is by signing this, and then they return it to you, or they return you something else that's notarized and says you're opted out, right? But the only legitimate reason you can opt out is this highlighted part here. If y'all can see that, let me zoom in a little bit. I certify that I am conscientiously opposed to, or because of my religious principles, I'm opposed to any public insurance that makes payments in the event of death, disability, old age, or retirement. So it's like a conscientious objector. You're doing this, think like the Amish. The Amish don't have insurance because it's an affront to their faith, right? A house burns down. They don't want anybody else helping out except the community, the faith community, right? And so this would be an affront to them to say the government has your back. They can't do that in good conscience, right? And so that's the spirit and the letter of this, right? Is the only reason that you can opt out of this is you're conscientiously opposed to social insurance, right? So it's not a financial decision. Thoughts on that? Questions on that?
Well, it's also not because you think Social Security's mismanaged and won't be there, to your point.
Totally. Yeah, so Dave Ramsey has said, like, you can be conscientiously opposed if you think it's not a prudent use of your money. And so if that's the path that you take, sure. It's a conscience decision. I can't answer that for your conscience, right? But it's not a financial, like, I need the 15.3%. That sure would be nice. Yeah, totally. That's not what's going on here. So if you have opted out, you got some get out of jail free cards. So number one, if you have opted out, it doesn't apply to non-ministerial earnings. So if you've earned money and you're qualified for Social Security, you've got your 10 years basically of payments into Social Security, then you're qualified for retirement benefits. When you opt out as a pastor, that doesn't go away. So you still get those. Or even if you work in a secular job after ministry and you are paying into Social Security, you get those earnings. You're not opting out of anything except ministerial earnings. Also, too, it's irrevocable. There's actually some legislation that they tried to introduce a couple months ago to make it where you had a one-time, like, hey, I didn't really mean to do this kind of thing. But as of right now, you can't. It's irrevocable. So once you say I'm opted out, you're opted out for the rest of your life. So it's a big decision. That's why I say it's the most impactful decision that I've seen pastors make from a financial standpoint.
Wait, you said it was revocable for a season?
They're considering it. So it's not right now. There was a time here in the late 90s where there was a window where they gave you the ability to opt back in, and then it went away. Does that muddy the water?
No,
You can't plan on not, if you opt out, it's,
I have a buddy who's in ministry that was out for a long time. Now he's back in.
okay.
He told me he got back in. So he may have been,
Yeah,
he may not have been right.
yeah. I'd love to talk with him if because there's,
No, I don't mean it as like an argument.
oh yeah, no, for sure. I've heard that as well. I've heard people saying that they do that. Everybody I've talked to says that it's irrevocable. That's why the legislation was introduced. But I have heard that maybe there's the law firms that will help with, you say, I wasn't really conscientiously opposed to this. Can I get back in? And maybe there's a legal way to get, but for all intents and purposes, it's irrevocable for now. But it doesn't apply to previous earnings or future Social Security earnings if you're not a pastor. So that's number one.
Maybe your conscience changes.
Exactly. That's a good point. It evolves.
I am
Yeah.
okay with America giving me money.
Yeah. Yeah.
I've decided that's okay.
Yeah. Well, it's funny you say that. So a way that you can continue to get Social Security is even if you've opted out, there's a specific pastor loophole that you can continue to get spousal benefits. So if your spouse is qualified for Social Security, so they've paid in, they've got the 10 years, and they're entitled to Social Security, even if you've opted out, you can still get the spousal benefit, which is 50% of their benefit. So for example, your spouse is entitled to $1,000 a month in benefit. You've opted out, you can still get an additional $500 a month in benefit from their spousal, tied to their spousal benefit, not your benefit. So you can get $1,500 a month. So that's why I put the get out of jail free card here, because I have seen pastors that, that opted out, but their spouse didn't, and they were able to file spousal benefit, and apparently their conscience wasn't all that bothered by getting 50% of their spouse's benefit. Questions on that? It's complicated for y'all.
Woman you gave me, Lord.
Yeah, exactly.
Jake, it's a social security question that I didn't even know
Uh-huh.
the other spouse automatically qualifies for 50% of that.
Yep. So it was used to be called the homemaker benefit. So it was created. It was like the Social Security was established in the 30s, and the next provision they created was, well, there's these homemakers that their husband dies, and now they don't have any money, and so there was the homemaker provision that was created to. No, that's why there's nothing written in. So that's why I said it's a loophole. This used to be a loophole. So prior to last year, we're getting into the weeds here, but hang in there. If you were a government worker, so government workers could opt out of Social Security, but they would not be entitled to the spousal benefit. So it's called the government pension offset. And that was a provision that prevented them from doing what we're describing here. But there's not a provision for pastors. Like it doesn't apply to pastors. And so the government pension offset doesn't apply to pastors. And so you can get 50% of your spouse's benefit, whether you contributed a dime to Social Security, completely opted out, you've never paid in any money at all, you'll get 50% of their benefit. Make sense? All right. This is everybody's favorite topic. I saved the best for last. Insurance and estate. So the short on insurance is most people prior to retirement need some form of insurance. Term insurance is the best way to go. Term just means when the term is up, the insurance goes away. So the thinking is when, say, you're 65, you've saved for retirement, you don't need insurance any longer, right? That's what your retirement is there for. If something were to happen to you, well, your investments are there to be able to help with that. But what I've seen, especially with younger pastors, is they just don't know that they need insurance. So if something were to happen to them, that's when you're most exposed. Say you're a young pastor, you're planting a church, your wife's staying at home, you've got young kids, they're all completely dependent on your income. If something happens to you, then it could be catastrophic, right? And so that's where term insurance comes in. 1 to 2 million in coverage is a good guideline there. Just rough numbers. You would expect, as long as you're in good health, you would expect to pay somewhere probably between $50 to $100 a month in premiums or in payments for this level of insurance. So bottom line is, if you don't have term insurance, you probably need it, and a good term would be up until you retire. So if you're 15 years from retirement, then 15 years of insurance. Does that make sense? Disability is kind of it's an unknown, it's a neglected. Most people, or a lot of people, will see the insurance and they'll see life insurance, but they don't look at the disability component of it. You're actually more likely to be disabled than you are to die early. And so that's where disability insurance comes in. It actually could be even worse than dying early, right? Because you've got increased medical expenses. You're not able to generate the type of income that you used to could generate. And so a disability policy is a good idea. A lot of times the churches, you guys will provide a group policy for that. If not, a private policy is certainly helpful. Or if not, then you'll need a private disability policy. The general guideline is 60% of your replacement income. That's usually the most that they'll give you. You want to have this provision called own occupation. So own occupation means if I'm not able to perform duties as a pastor, but I can work at McDonald's, you'll still pay me my disability insurance payments, right? You'll still pay me. That's own occupation. If you don't have own occupation, you can't work as a pastor, but you can work at McDonald's, then you don't get any money. You don't get any payments, right? And so that's why I say own occupation. 60% of your replacement income. This is another, if you've opted out of Social Security provides a form of disability. And so you don't get that when you opt out. And so disability is especially critical for folks that have opted out of Social Security. Make sense? Any thoughts on that? Questions on that? Say that again. No, you're good. So I would say first line of defense, Social Security. Second line of defense is if your church provides a group policy. And then the third line of defense is a private policy. So if your church doesn't provide one, you probably still need a disability policy because Social Security is only going to provide like $2,000, $3,000 a month in benefits, roughly. And so the gap still needs to be filled somewhere. Does that make sense?
Do you know, Jake, offhand, you said 1 to 2 million term is $50 to $100, I think.
Yeah.
What is disability?
Disability, that's a good question. It's probably double that. So I would say it's $100 to $200 a month, depending on your age, health, how much money you need, like that kind of stuff. But it's more expensive because it's more likely to happen. All right. This is the last thing anybody does. So in my almost 10 years of financial planning, having an estate plan is the absolute last thing that people do because who the heck wants to go talk about their death, right, and what happens when they die? But it's certainly critical to have. I think it's prudent to have. So a will is just the document that says, when I die, this is what happens to my stuff, right? If you don't have a will, then it goes to the state to decide what happens to your stuff, right? And you don't want it to go to the state to decide what happens to your stuff. Medical directives are just as important. If you can't function, if you're incapacitated, who's making medical decisions on your behalf? Who's making financial decisions on your behalf? That's the power of attorney. So those are just as critical as a will. But here's a kind of lesser known fact. So beneficiary designations, so like in your 403B, when you say, if I die, this is my beneficiary, so it goes to my wife, those actually supersede a will. So if your will says it's supposed to go to my daughter, and your 401k says that it's supposed to go to my wife, it's going to go to your wife. And so beneficiary designations are just as important as having a will. A lot of people think, okay, whatever my will says is what happens. But that, again, that's not the case from a beneficiary designation standpoint. So your Roth accounts, your IRAs, your even your insurance that you have, those pass, doesn't matter what your will says, it passes outside of your will. So it's important to have your beneficiary designations up to date. All right, so just to summarize as a wrap up, the budget and knowing what you spend, how much is enough, is the foundational concept, principle of financial planning. If you can't answer that, you literally can't answer any of these other questions, right? So you got to have a budget.
Hold on, one question. Just out of curiosity, the number of people that show up in your office that know how much they spend and have a budget, what percent?
0, give or take.
Pastors show up with that.
0, give or take. Yeah. No, actually, I'll take that back. The pastors that I've met with, I'm thinking of some that had a budget. They knew they knew their budget. So, but yeah, most people that come to us don't know. They don't know that answer. So that's part of what we do is we help them figure that out. Wow. Once you get your budget, build your emergency fund up. That's your first line of defense. It turns catastrophes into annoyances. And then get out of debt, especially as folks that are on the forefront of church planting. Having that flexibility is critical, right? So getting out of debt. Debt allows, the less debt you have, the more flexible and the more options you have. Then you start saving for retirement. 10 to 15% is a good general guideline. If you haven't opted out, if you have, 20 to 25% is a good guideline. What to invest in? Focus on something diversified, something that you can autopilot, set it and forget it. Target date funds are a good option for that. Minimize costs, so those are index funds. Don't try to do it on your own. 95% of professionals that are paid a lot of money to try to beat the market don't. So you as pastors should not do that also. But Bitcoin's okay all day long. Protect yourself with insurance and estate, and then understand the pastoral tax opportunities. So these are on the margin. If you didn't take advantage of any pastoral opportunities and you just did everything else, you'll be great. But to take advantage of the pastoral tax opportunities, it would be housing allowance in retirement, maximizing your housing allowance prior to retirement, those types of things. So with that, questions, thoughts, how can I help? Any burning investment questions? Outside of crypto.
Did you already talk about if you already opted out, are you just screwed?
Yeah. Let's go back to that slide. So if you've opted out, just to recap, doesn't apply to your previous earnings. But you can continue, if your spouse is qualified for Social Security, you can receive your spousal benefit from that. So it's 50% of their benefit. So if they get $1,000 a month, you're entitled to an additional $500 a month. As long as, yeah, as long as you're right. Back to the reason you opted out. The reason you opted out is you're conscientiously opposed to it. And so, right, so yeah, exactly. Well, so technically, it's your spouse providing for you. As long as you're fine with the government providing for your spouse, and then your spouse providing for you, then your conscience is good. Yeah. Then you get in the complementarian. You get, yeah. Yeah, we talked about that. It can change, right? Yeah. Yeah. Yeah, age 70 is usually the best. That's when you max it out. And so you get an 8% bump every year that you delay until age 70. And so can you get better than what's called a risk-free 8%? That's a guaranteed 8%. There's nowhere else that you might get 8% in the market, but you also might get minus 40%, right? Because the market's volatile. And so that's why you delay until age 70 is the general guideline, because you get an 8% bump every year that you delay. All right. Yeah, thank you all. Guess I'll turn this off.